Hi, good evening, everyone. I'm Amy Lei, a stock trainer at the Untitled Chapter company, which is a stock training school. Nice to see you again. And today, this video is going to be the 22nd of my channel, Amy Stock Analysis Daily. And the topic today is the third part of this series about claim victory in stock market. Okay, so in the first and second session, we mentioned that it's very important for us to set up our own profiting model if you want to be a constant winner in the stock market, because we know that stock market is not a one-time gambling, it's a repetitive game. So if you want to make constant profit in the stock market, you want to be the final winner in the market, you have no choice but to set up your own effective profiting model. And we have mentioned the criteria for a good profiting model, and we mentioned that the profiting model must reflect the regularities of the stock market movement to make sure that the success rate can really be high if you apply it in the long run, right? So this is the only way to make sure we can make constant profit. And then we also mentioned the profiting model must be as easy to master and abide by as possible. Too difficult, not possible for us to master and abide by, right? And then the most important thing about a good profiting model is it must include all the elements of trading strategies, including filter, entry, exit, and stop loss, and risk control, and also management. We mentioned that management is a higher pursuit. The purpose for fund management is to maximize your profit. That's not the most important thing for most of retail investors, because for most retailers, the truth is they cannot make money. They lose money. So they want to make sure they can make money and stop losing money. That's their priority, right? So fund management, that's a higher pursuit. And then risk control, we mentioned, is highly dependent on your trading strategies. Means the most important thing about profiting effective profiting model is you need to have the good trading strategies, including filter, entry, exit, and stop loss. And in the second session, we mentioned about filtration, right? So what kind of stocks to pick? I have shared with you how Homely pick the right stock. Still remember, huh? And then today I'm going to share with you how to deal with the entry, exit, and stop loss for short-term trading. Because when you enter, you must decide whether you want to buy and hold for a very long time or buy and hold for, let's say, several days, 1 week, 2 weeks, then you want to leave, right? For short-term trading or medium-term to long-term trading, you need to make a decision before you enter, right? So today, we will focus on short-term first. Okay, so entry, exit, and stop loss for short-term trading. So if you just look at the candlesticks, no way to check where to enter, where to exit. We have to resort to the help of some powerful indicators, the Homely software indicators. And the very good indicator I'm going to share with you today is called okay, so about the indicator, we talk later. Firstly, we need to know the key to short-term trading. Okay, so firstly, if you want to make profit for short-term, the most important thing, you need to make sure that the upward momentum is strong in near future. If the upward momentum is not strong, you buy, you hold for short-term, it's very likely you don't have profit or even you lose money, right? So upward momentum strong, very important. And also you need to make sure that your entry and exit are done at the proper timing. So entry and exit in time also very important. And then thirdly, always don't forget that stop loss is very important, because we cannot make sure 100% accuracy rate. So no one can do that. So set stop loss when in case that you this time you are wrong, and it's very important, right? Set up your stop loss level and abide by it strictly. Okay, so this, if you can handle all these three elements very well, then for short-term trading you can make sure that you have a very high probability make profit, and even very great profit if you have picked the right stock with strong upward momentum. Then how to make sure that the stock you pick has very strong upward momentum in future, or in another way, greater potentiality in future? Actually, we have mentioned this in the last session. We mentioned that either bullish market or bearish market, as long as the money flow in continuously, the price will keep rising all the time. So you want your stock with strong upward momentum, you need to make sure continuous money inflow. And we have mentioned that only the big boys can pump money into the stock market continuously. So following the big boys by checking multicolor dragon, right? So multicolor dragon, the red bar represent the big boys, the yellow bar represent the speculators, we call them hot money, and also the green bars represent retailers, right? And by following this multicolor dragon abbreviation MCD, we already can make sure that the upward momentum is strong. So the standard is we need a red bar of MCD stay stably about 50%. So you see, we have a value on the left side. This is 50%. If the red bar reach 50 and exceeds 50 and stay very stably above 50%, this kind of share usually upward momentum very strong, because they are taken already, bankers have taken control. Okay, so if you have learned very well about last session how to pick the right stock based on multicolor dragon, then you already can make sure that you have picked the right stock, the stock with strong upward momentum, so that you make sure for short-term trading your upward momentum is strong, right? And then how do we pick okay, so how do we find the proper entry, exit, and stop loss? That's another very important issue to deal with, right? So the indicator I'm sharing with you is called strong signal. Okay, so maybe I put it here, strong signal. Okay. Okay, so I'm going to share with you a very powerful indicator called strong signal. And in this chart, you will see the candlesticks are colored as red, dark blue, yellow, and light blue, right? So the color, the candles, they are one indicator called strong signal. The normal color for the candlesticks, green means today the price go up, means bullish. Red means the price today go down, bearish. But after you bring out this strong signal in the homely software, the candles will be colored as 4 colors, okay? And the red bar the red bar here means the buy signal, and usually for strong signal, it's for short-term trading. Short-term trading, maybe short-term to medium-term, more or less short-term oriented, okay? So for short-term trading, the red bar here means the buy points, means upward momentum turn strong. And if it's a dark blue all the time, you keep holding your share, okay? After you buy, you hold. When do we sell? When we see the bar turn color to yellow, yellow means sell points because the upward momentum turn weak, so we sell. Okay, then if it's a light blue, means you need to stay sidelines. You hold your money, never buy unless you find another red bar, means entry point, right? Light blue means the upward momentum remain quite weak, so better not enter. And then sometimes if you buy, then no profit, you have a yellow signal, so this will be your stop loss. Because I'm not saying that the Homely software, the indicators are 100% accuracy rate, cannot reach 100%. The success rate is 87%. 87% is the success rate for the indicators. For example, this time you buy, if you see the red bar here, you buy, then the price didn't really go up, you have a sell signal, you need a stop loss. So with this strong signal, we can get a very clear buy point, sell point, and your stop loss standard. See, this time you buy and you sell, you perfectly avoid a short-term correction. And this time you stop loss, you also avoid a correction here, right? So this is the very good indicator for us to do the strategy making when it comes to entry, exit, and stop loss. Okay, so we can see some example. For example, yesterday we also mentioned Apple, right? So for Apple, we realized that this one has big boys in, and big boys keep increasing actually all the time. So we know it's a share with great potentiality in future. But when to buy? Based on our strong signal, this is the buy signal, right? After we buy, then we keep holding. It's a dark blue all the time. You see here, when the price reached the previous high, if without checking the indicators here, then you don't know what to do, how to deal with. You are afraid that the resistance at the previous high is very strong, the price will turn down, but you're not sure. So with the help of strong signal, it can solve the problem. You don't need to guess. You just need to follow the signal. If no yellow color, no yellow bar, you keep holding. So then you follow. Although the price gets some resistance here, a sideways there for roughly more than 1 week. But still, we don't have the sell signal, so we keep holding. Then we see the price continue going up. So recently, we already have a sell point because we have a yellow bar, right? So we sell. We buy here, we sell here. Then you can check. You hold for 45 trading days. Your profit is 27%. A handsome 27%, roughly 30%. It's a very good profit, right? So after you sell, then you see very quickly we get another buy point. So if you get another buy point, you buy. If in near future, if the buy point is wrong, it will quickly show you a yellow sell point. You stop loss. If it remain dark blue, you keep holding all the time until next time you get a sell signal. So it's very simple, clear, and can be easy, can follow very easily. It can be mastered very easily and abide by very easily. Remember the criteria for a very good profiting model. It must be easy, simple to master and abide by. So the strong signal is very simple, right? Very simple to follow, to learn, to master, and to abide by. Okay, so then you might wondering, well, here I have a buy point, I have a sell point. This time the profit is not that good, right? Because you check below, we still have a lot of retailers. We have a lot of retailers, and the big boys less than 25% here. That's why for this time, for short-term trading, the profit is not that good. And then when here we have the buy signal, we see the big boys still remain around 25%. If you want to make sure that you buy at a safer entry point, maybe you can wait until this candle when the retailers disappear completely, and the big boys, at least the roughly slightly increasing. When you see the retailers disappear completely, usually the price will continue going up and the big boys will increase all the time. Then you want to make sure you are safer, you buy later. If you can take some risks, you can buy here. Okay, so with the help of this indicator strong signal, you can solve the problem easily. When the price reach previous high, whether or not I should sell or I should hold, right? Okay, then of course this is when the price in the correction, medium term in correction, and we see a lot of retailers, no big boys, so no need to buy even when you see the buy signal here. The buy signal here is not the right buy because it's not the right stock to pick. Too much retailers here, too little big boys, so don't buy. We only buy when the big boys we have more big boys and no retailers, then we buy, right? Okay, so this is a very good example to show you, and then maybe we can check the real software to see some other examples. Okay, so this one, of course, we are familiar. This is the famous UG Healthcare, right? So you check here, this buy point, that's 26th May. You buy because retailers disappear completely. Retailers disappear completely. This is the buy point because first read bar, right? And then you see the big boys increase more than 75%, and before that we see the big boys can stay above 50% stably for a while. This is already more than 2 weeks here, so it means it's strong. It's strong with great potentiality in future. Upward momentum should be strong in future. Then you get a buy signal, you buy. After you buy, you hold as long as it's dark blue. It turn yellow, right? It turn yellow, you sell. But after you sell, you need to know that this is for short-term trading. After some correction, maybe sideways, then we may have another buy signal again. So to short-term trading, you cannot expect that you sell the price just go down all the time, especially when the share is quite bullish with big boys more than 75%. This kind of share usually would be quite crazy. It would be better we buy and hold for medium term to long term. But today I'm sharing with you the short term trading method, so you just follow the signal. Another time, if we have a buy signal again, the following day buy signal again, you can buy again. After you buy, then for short term you get some other profits in near future. Okay, so at this moment, many people already feel that it's too high. They dare not buy. Majority of people, when they see the chart like this, they cannot buy. They dare not buy. But if you see the big boys increase further, and this is the buy signal based on strong signal, then you buy. You follow the signal, you will not be afraid to buy. And of course, another thing I want to mentioned that this is the bamboo shoot pattern, right? Do you remember last week I shared with you this powerful pattern called bamboo shoot, right? Bamboo shoot pattern is a very powerful pattern. You see, this is the perfect pattern, bamboo shoot pattern. Then it's perfect. Okay, so this is a very good one. Then we also have some other quite bullish shares for Singapore, Hong Kong, Malaysia, US, all markets. We have good shares, good shares, really good ones. And you see Riverstone, right? Riverstone recently 29th July buy points, and the following 2 days very strong, upward momentum is very strong. That's 19% of profit, 19% in just 3 days, crazy. And also you will realize that this is also the bamboo shoot pattern, right? So bamboo shoot pattern is very powerful, it's very, very good. Hope you have mastered the pattern. Okay, and then here, for example, this is also the buy point, because the big boys remain roughly around stay stably around 50% for a while. And then we have the short-term buy point. You buy, you hold until we get a sell signal, you sell for short-term. Another time you have the buy signal, you buy again. You see, for this time you also can have a very great profit. 95% doubled, your profit doubled. Okay, so another problem with a lot of investors is after they buy a very good bullish share and they cannot maximize the profit, they make some very small profit. Maybe here Riverstone buy, then for 4 days, 1 2 3 4 days, they think, wow, this is already very high. Short term the profit is very big one, they sell. We always sell too early for the bullish shares, but with the help of multicolor dragon and strong signal, you can hold so that you can maximize your profit until here. After that, the price sideways there for several days, another short-term buy point, you buy again. With the help of the signal, you can maximize your profit. You don't need to sell too early. You maximize the profit just. Okay, so this is Riverstone, and maybe we check another one. Okay, so for Yuma recently, here we have the buy signal. At this moment, we see previously the big boys, they roughly quite stable around 50%. Only that for this one, we still at this moment we still have some retailers, right? So at this kind of buy points, we still have some few retailers. It can be a little bit more risky than the ones without retailers already. So for this kind of share, you can try. If you can take some, you can tolerate some risks, you can try to buy here. If you cannot, maybe you wait until the retailers disappear. But if you want to be safe, your buy point might be a little bit late. Okay, it can be a little bit late. Okay, so that's for Yuma. Okay, so and let's check some other markets. Let's say Malaysian market. Okay, so for this one, we check at this moment. Also previously, a lot of retailers, we may want to stay sidelines. Of course, you see, you follow the signal, you still can make profit, right? But we want to make profit safely, so you better wait until the retailers disappear. Here at this moment, this is the buy signal. Retailers disappear completely, you buy. This time we have the buy signal, but we still have some retailers. Then the price drop a bit first because retailers didn't really disappear. So here disappear already, you can buy. See, you buy, you catch the great profit. You only sell when you see the sell signal. So for this time, wow, doubled in 18 days, right? And then after that, buy points, buy again. So stop loss. So this is I mentioned it's not 100% accuracy rate. So when you see the sell signal, you sell. After that, yeah, you may want to wait for another buy signal, right? So this is the one, and then another one maybe another Malaysia one. Okay. No. Okay, this is not a very good one, because you see still a lot of retail big boys haven't yet reached 50%. This is not a very good one. So maybe we can check some other shares, Hong Kong ones maybe. Okay, so you see for this one, recently this is the buy point, right? Buy, you hold for short term, still at profit. Of course, here we buy and we sell. We sell to avoid the short term drop, and for 3 days, right? For 3 days means for this time no profit. But how about this time? You buy here, you sell here. This is a great profit. We are not pursuing 100% accuracy rate. We are pursuing big profit, and within a period as short as possible. That's what we are pursuing. You know, higher success rate doesn't necessarily mean the maximize the profit. Okay, so here for this time we get 30% profit. Good enough. This time no profit, but no loss. The most important thing, no loss. Okay, so this is the buy point. Sorry, buy and sell, right? And then buy again for short term. We are still at a profit. Okay, so you see here, we see the retailers already disappear completely. The big boys increase. Now is 25. You buy if you see the big boys increase all the time, then you know that great opportunity in future. You buy and hold. Okay, so this is the one, and then maybe some US shares. Okay, so see Zoom recently, this rally is a very good one, right? You buy and you hold until now, 23 days, 50% of profit. Okay, and then for this time, this is a small one, small profit, and small profit. Important thing is, after you sell, you always avoid the correction for short term. Okay, with this profiting model, I'm sure you can maximize your profit and minimize your risks. That's all we need if you want to make profit, constant profit in the stock market. Okay, another one maybe. Okay, so you see for this one, this is a sub new share, right? Buy point here. This is the buy point. We have the big boys roughly around 75%. So this buy point is good one. Sell, right? This is the sell point. We sell. Okay, we sell. So the profit is 51% in 16 days. The important thing is, you see, after we sell, we avoid the correction. If you don't sell here, you keep holding until now, you have lost all your profits you have made this time, right? So buy point is important. The sell point is also very important. If you cannot sell in time, then you cannot keep the profit you make, or you cannot secure the profit you made previously. Okay, so that's it. Okay, so that's about today's sharing. I mainly share with you the profiting model for entry, exit, and stop loss for short-term trading, right? And then for tomorrow, I'm going to share with you the medium-term trading profiting model when it comes to the entry, exit, and also stop loss. Okay, so if you like this video, don't forget to give me a thumb up, and also you're welcome to share this video with your friends. And see you tomorrow 8 p.m. Bye bye.